So we saw in March consumer sentiment dipped 1.8%. Down to 84.4, still in deep pessimistic territory. The last couple of months we had seen some glimmers of hope around the consumer, that some of the cost of living pressures might be easing, that they were a little bit more hopeful around the direction for interest rates over the medium term. This monthly update shows that improvement's still going very slowly and has been offset a little bit by renewed concerns about the economy and the outlook for the next 12 months. When we look at the 5 components of the index, the big mover this month was around expectations for the economy next 12 months. That component index dropped 4.5% month to month. It's still up on a couple of months ago, so we are still seeing an improvement, but certainly the December quarter national accounts that was released at the start of the month probably emphasised the weakness that the economy's seen, particularly the soft finish to last year. That probably played into some of those results. And around sort of the inflation piece, it's still a dominant concern. Cost of living pressures really still bearing down quite heavily on the Australian consumer. So it does look like it's still slow going for the consumer. Around that interest rate view, for example, we saw again a significant turnaround over the course of the survey week. So consumers were quite upbeat prior to the RBA decision and then weakened significantly in the back end of the survey week. Again, that sort of suggests to us that they are hopeful that they'll get the all-clear signal from the RBA on inflation at some stage. The RBA is still not confident enough around the inflation trajectory to really utter those words, and so consumers again a little bit disappointed around the interest rate view, still very uncertain around the interest rate view. So we asked them specifically where they expect interest rates to be in 12 months. 40% expect mortgage rates to be higher, 20% expect them to be about the same, 20% expect them to be lower. So they're still pretty edgy around the outlook for policy. When we sort of do a flyover of the various subgroups, it makes for some interesting reading. We do have some pockets of outright optimism. When we look at people that own investment properties, for example, are actually net positive. People in Western Australia are quite positive. 18 to 24-year-olds are actually quite positive as well. I think that reflects the labour market conditions there for the youth workers. And males in general tend to be much more positive or less pessimistic than females at the moment. At the other end of the spectrum, though, older age groups, Gen X as well, which is sort of at the pinch of the affordability and high debt servicing costs issue, more pessimistic, and females and teachers at the other end of the spectrum in terms of confidence. So within that weak picture you do have variations, but the pessimism is pretty widespread, and it does capture that the general nature of the cost of living pressures still bearing down. So all in all, a slight dip month to month, retracing some of the gains we'd seen, some tentative signs of improvement, but still very slow going, and really waiting on that all-clear signal from the RBA, I think, around inflation before consumers can allow themselves to be a little less pessimistic about the outlook.